USD, let's be very honest with ourselves and look at price action the way it is. As much as everybody is looking for a sell opportunity, we have to understand the beginning of this breakout structure. And when you look at the price here in the month of November, has formed a demand flow, and that demand flow was followed by another demand flow, and we have here a clean breakout structure. And yesterday, sorry, that was on Friday, 24th, price came back to retest that structure, affirming this as an ascending trend line. Now, the issue here is that the price has come to an area of drop off. Yeah, it has come to an area of drop off, and when you look at the structure and its formation, you see that at that level, price could technically on structure drop after price been updating itself series of higher high, higher low, 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 higher high, higher low. This could be the end of a new higher high and a drop off. Yeah, because the for everything that happens in the market, it's best that we look at the history. Look at the history. So let's take that thing off and look at it once again for educational purposes. It's just for reference. Don't take it personal. So when you look at that structure, you will see what I mean. So you see that structure is quite explanatory and paving way for sell potential and at the same time buy reinforcement. So if price breaks out from that structure, it further reinforces buy impetus whereby you're going to see more liquidity into the market where buyers will come in and want to leverage on the sentiment. And we have a lot of data, the PC, the Michigan data points, the employment index, all these are all going to add to the buy sell impetus of SAUSD in maybe less than 30 minutes from now. Economic data points will be out, and this could alter the trajectory of trade decision and direction as well. So we want to see if that tap into 808 will provide that sell impetus. But if that fails to provide a sell impetus, then our technical one will let you know that we have something coming, something more. So if a breakout from that structure, then this will ultimately be your first layer sale. So if price breaks out from that structure, then expect it in this zone. So we'll be watching it to see if they have all it takes to break that structure. If they break that structure, that is fine. Then they are ultimately coming to 2,838 into 40 as a first layer touch after breakout structure. And at that level, you will see price make a significant retracement to upswing where it will seek correction and return back to break up supply roof. It's very much technical at the moment, and but this price action is very important because the build-up of liquidity and the breakout of structure started from last year November. We must not overlook it as price building here is a demand floor, building here is another demand floor, and have another demand floor here before break of demand floor and the retest to a broken demand floor, making the supply roof. So it's a clean break of structure cluster in this area. And when price returns here, it retested a broken demand floor again as a retest to have supply roof one, supply roof two, and price moving back into that structure. It's a retest two, retest one, retest two, retest three to the breakout of this upswing structure. So what we see here on technical is that this area might be respected or disrespected. But whatever happens out of it, we we hope that the market will sustain in less than 20 minutes from now. Economic data print will come and it will be a make break situation. If the data print comes in higher than expected, the greenback will find more impetus and thereby igniting SAU sell rally. So on that note, it's good to be very vigilant and if possible keep up the market. If you're a hedge fund manager, it's best to keep up the market because the fundamental data prints have a very erratic price movement and can technically swing your account into potential danger, thereby spoiling your relationship with your investors. So it's best to keep up the market. But if you're a small trader and you're willing to risk it, and then you have means of resourcing or refinancing yourself, it's okay. It's okay. You can get on board and take a risk. So I potentially want to see a return back if we're having a drop off. If we have a drop off, I want to see price return into this zone for a potential bullish opportunity. So at this level, I'll be watching critically to see if price returns to this level. A return into this level will ignite my buy potential, and I will set a buy order ultimately at this level, hoping to take advantage of that bearish drop where I have to go high. Close of 45 minutes candle brought in a correction to that supply zone where price have tapped in, and I hope that this level will continue to hold that selling impetus. But however, if that structure it returns based on what data print sentiment provides, that could be a good time to see. But we will first of all watch price at 2777 level, 27780 level, where we expect some midterm support. And if that fails ultimately, then we wait for price at this level where we'll have a potential buy opportunity as a result of breakout of structure. And the impetus at this level, it's built on price updating the supply roof, another update of a supply roof, and the lastly update of a supply roof before break of structure and price return on Tuesday 28th on a strong phase and the market is making its move. And when you look at it critically again, you will find out that that buy that buy that came on Tuesday 28th came on double confluence. It came on double confluence because on that note you have an ascending trend line to back it up, thereby providing more sales, more buy sentiment, indicating that SAU have got the liquidity and central bank stepping in to increase their bullion. It's an opportunity for retail traders to trade along the Federal Reserve initiative and the central bank objective for gold acquisition. I think at the moment that gold is overpriced. However, it's overpriced, it's overbought, and any moment from now you could be seeing some correction. But except the market willing to do otherwise, then you want to tap into a higher area of liquidity. So a tapping into higher area of liquidity will definitely provide ample sell opportunity, thereby changing the sentiment so we can ride on and take correction to that bullish wave. But at the moment, I think the data prints today will just be too much for the yellow metal to bear, thereby providing a non-directional trade decision. So the best is to keep off. The data prints are much, and the market will react in any way. But the most important information is the PCE. The PCE is the most important, and that's is of course the Federal Reserve uses it as a gauge to watch inflation. So the PC data print will be the most watched by Federal Reserve, and other monetary policy team members will also be watching, and we'll have Bowen speak by later on in the evening. A member of the Federal Reserve will make his remark and also have something to do with monetary policy decision. So each of them will actually have its effect and will bring a change in a trade direction. But at the moment, I think a tap into 2808 is providing a sell impetus which we cannot finalize at the moment until we have a breakout of this structure. But let's be honest, if we have a sustained breakout from this structure, I want you to know that the wave for buy of gold is limitless. This is what you could get in that limitless wave of buy potential. You could see gold trading into zone of 2,300. So you can see the candle, you can see the reaction, you can see it. So please be very mindful, be very, very mindful of this level. A breakout of this level will ultimately show you something you will not like. So a breakout from this level is actually going to show us what we don't want to see. What we don't want to see is that while retail traders are complaining, institutions, central banks are not complaining. So if institutions and central banks are not complaining about the high cost of gold, then the retail traders have no opinion, have nothing to worry about. All you have to do is to key into the higher sentiment of the market. So I see at this level, I've set a blue ascending trend line that becomes a new litmus test It's a new litmus test because when you look at the price action, you see the price action have represented a buy potential in the past, making it an ascending trend line, and that ascending trend line had a psychological effect. We call it a psychological ascending trend line. So you see the structure. I want to say it lastly before we close and ramp up. Demand floor, break of structure at this level, and price returns here to retest the structure, and it's retesting it again. So if we break out from this structure, it opens a new wave of travel. And if we have a sustained buy, on a sustained buy, you could see SAE USD heading into close to 2,900 zone. So trading within this mark, this is just what it entails. So we must watch it and don't be caught off guard. So if you are on sale at 2808, you are an early trader, you have done right for yourself. That's a very nice position to wait for sale at that level. You are waiting for sale on structure. And it makes a whole lot of sense to see that if the fundamental comes in favor of the SY and the greenback reacts and have a considerable boost in price, that will be an opportunity for gold to plummet. So on that note, let's be very watchful, let's be very mindful, let's trade with discipline, and equity preservation is key and critical. So that's what we have for now for SAU USD. Shall be FS Hub.